Good morning. So this morning I'm just going to, start kind of what I like to do going forward here, which is doing a quick live stream each and every morning, just kind of going over what I'm looking at coming into the day. TradeUp server, new server that I'm starting as I move on from the previous. If you've ever heard of the saying, you are the company you keep, that's kind of the basis for what we're going to do as far as surround yourself with professionals. So if you're looking to improve your trading, if you're looking to, be around like-minded individuals and you're already a successful trader, that's what we want to offer at TradeUp, tradingroom.com, is allowing yourself to surround yourself with professionals and like-minded individuals so that each and every day we can come into the market and succeed. So very quickly today, as we are coming into the market now, first and foremost today, obviously, is the Fed announcement, FOMC. FOMC hits at 12 Eastern. So what will happen is we will get, some pretty exciting, 2 Eastern, 12. I'm thinking about where my time is. We'll get some fairly interesting movements today, I would imagine. As we pull up, our daily outlook on our profiles, we can clearly see that we're stuck here in a value balance range. Okay, we've been stuck here for quite some time. We've looked above it, looked below it here. There's a real lack of commitment either direction, and this has really, created the possibility of a sizable move either direction. Now, with FOMC, keep in mind volatility will increase. I'm a big proponent of not trading FOMC. Some of the best professionals in the world lose money on FOMC days for no reason at all. There's an excitement value to it, a sellable feature to it where people get you hyped up for it. My personal standpoint is look at how the market has traded, for the last 7 days. If I can trade within this exact range, in the first 2-3 hours, which is my go-to times, I'm just going to do my trades within my plan. And leave the FOMC for everybody else while I'm on the golf course enjoying, some of the perks of doing this full time. So as we're looking ahead here, we know we're in a tight range. We know, we're very mechanical in nature. Volume has been, okay, not great. And coming in, I'm really just going to be paying attention to see where we break from. So 27 is a level that we've had for quite some time now. 27 comes from June 7th M rally. There's a contextual reason behind that. I've gone over that before in some of the webinars with the TradeUp server. We just don't have time to get into that right now. But what we are looking for is effectively the market to break out of what is a value balance. Now, value balance and balance are two separate terms I use. They mean two different contextual things, and it's very valuable to have an understanding of both. So as we continue on here, the market itself has found extensive value within a very tight range, pretty much from your 42.20 up to your 42.40 area. You've done a lot of trading back and forth. Now, each and every day, it seems to be the same thing. Everybody sees it. Everybody's talking about it. We open above 27. We liquidate back to 27. We find a buyer and we rally. It's happened, last Friday, it happened on Monday. It happened yesterday on Tuesday. And I would continue to look for a very similar opportunity. Now, does that mean I'm all in buying 27 as soon as it gets down there? Absolutely not. But what I will do and what I will monitor for is the potential for a buyer to re-engage around 27 level. And from there, jump on their back once they give me a clear and concise entry. Likewise, if we do push up towards our previous all-time high, which was sitting just above that 49 level, I will look to fade that opportunity if the market does not have a strong bid, especially going into a major announcement. The market generally doesn't get too carried away, generally doesn't get, too aggressive either direction. Anything can happen, though. Don't ever use, past situations to predict future ones. What you want to do is use, simply the market generated information that we're being given right now and use that to effectively navigate the market. And that, for me, is simply understanding that we're in a value balance range. The market itself has found extensive value within a very tight range of about 20 points or so. And within that 20 points, the same kind of pattern has occurred over and over and over again. And real change will come when that pattern starts to, stop happening and we can effectively, enter the market in a different and stronger directional move. But For right now, like I said, 27 is where I want to monitor first and foremost. This 37 level is the level that comes, from a few days back. It's an area of monitoring. I'm not looking to trade off it at all. And then our previous all-time high and our current all-time high is something I would look to fade against if the market runs up there on lower light volume without much enthusiasm. Downside, if we continue on and if you stick in FOMC, best of luck to you. But if you do, understand 06 to 03 has been a very, very strong supportive level. And then there's multiple levels below us there to look for a strong buyer to re-enter the market or a strong laggard buyer to re-enter the market. That being said, that's pretty much all I wanted to go over today. I hope you trade well. Don't get mesmerized by FOMC. Don't get trapped into the idea that you can't trade before FOMC and it's better to trade during FOMC. Keep in mind, FOMC creates additional volatility and additional range very quickly, very effectively, and very aggressively. As a day trader and as somebody who wants to do this full time, you should not want to always be involved when the market is at that range, especially when we've been in such a tight, low, subdued volatility range. If you start getting, carried away thinking I'm going to make my big money today, first and foremost, you ever get that thought in your mind that this is my opportunity to make a lot of money, you've already lost money. I can promise you that. It is a poor mindset. Keep yourself out of trouble. The best way to reduce your risk is to keep yourself out of trouble. And for me personally, I've seen more people get absolutely crushed on FOMC than, crush it. So keep that in mind, stay safe, trade well, and we will see you again.